Hi guys and welcome back to the Mindful Investing channel. Today I want to talk with you about Intel stock, ticker INTC. Before we get to a valuation of Intel, let's start with the question, what is Intel? Intel basically is the world's largest semiconductor chip manufacturer by revenue. Their chips and processors are mostly found in personal computers, for example in the new Chromebooks. So let's begin with Intel's valuation. Before we're able to value Intel, we have to make a couple of assumptions. We have to assume the growth rates for their free cash flows for the next 5 years and for the 5 years following those 5 years. We also have to make an assumption for their end multiple, so basically price to free cash flow, and their buyback yield. So let's begin with our assumptions for Intel's free cash flow growth rates in the future. To get an assumption for those growth rates, I personally like to look at their past historical growth rates. Therefore, I look at their free cash flow and calculate the 5-year CAGR, basically the annual compounded growth rate. When we do this for Intel, we get a compounded annual growth rate of 12.4%. I personally always like to make conservative assumptions. Therefore, I only assumed a growth rate for the next 5 years of 7% and a growth rate for the 5 years following those 5 years of 5%. Let's continue with our assumption for Intel's free cash flow multiple. Basically, if we look at their price to free cash flow ratio over the last, let's say, 10-12 years, they are basically always in the range of 8 to 20. Therefore, because I think that Intel is a great business and that their multiple will expand in the future, I assumed an end multiple of 15. So let's enter this 15 times price to free cash flow end multiple for Intel into our model. The last assumption we have to make to be able to value Intel is to come up with their future buyback yield. As with Intel's free cash flow, to come up with a buyback yield for Intel, I like to look at the historical development of their shares outstanding. As you can see, Intel basically continually reduced their shares outstanding. So based on the last 5 years, Intel's buyback yield was around 2.9%. As always, I like to be conservative in my assumptions. Therefore, I only enter a buyback yield of 2.5%. Now, after we made all of our assumptions for Intel, we are able to calculate an annual rate of return for the Intel stock regarding their current stock price. Intel currently trades somewhere in a range of 50 to 51. By adjusting our discount rate, which is basically our annual rate of return, we're able to come up with a fair value for one Intel share which is equal to the current stock price. We achieve this fair value equal to the current stock price with a discount rate of around 19.7%. Therefore, if all our assumptions turn out true, Intel offers an annualized rate of return of 19.7% for the next 10 years. Another argument for an investment in Intel stock is that there has been high insider buying over the last couple of months. And like Peter Lynch already said, insiders might sell their shares for a number of reasons, but they buy them for only one. They think the price will rise. And that's most definitely some interesting aspect regarding Intel. Finally, let's talk about how I will enter my Intel position. To enter a position, I almost always sell put options because I can profit from the premium of the puts to reduce my cost basis, and if I'm not assigned to stock, I will also achieve an acceptable return on my invested capital. So let me show you the put options I sold in detail. I basically sold 3 put options in Intel at the 48 strike, all expiring somewhere in January. Let's first look at the put option expiring first. So basically the put option expiring on January 7th at a $48 strike. To enter this position, I received a premium of $1.24. To calculate my cost basis, I just subtract this $1.24 from the strike price of $48. Therefore, my cost basis, if I'm assigned to stock, is $46.76. In the case of Intel staying above the $48 strike, and therefore me not getting assigned to stock, I have to calculate my cash on cash return. To calculate my cash on cash return, I simply divide the premiums I received, so basically the $1.24, by the amount of cash I have to set aside for the case of assignment. But I also have to keep in mind that I will always receive my premiums upfront. So the total amount I have to set aside for a potential assignment is the strike price minus the premiums I received. So to calculate my cash on cash return, I simply divide the $1.24 by the strike price minus the $1.24. So my cash on cash return for this holding period of around 45 days will be approximately 2.7%. Finally, let's do the same for the other two puts I sold in Intel. Their strike price is also at the $48 strike, and their expiration is in January 28th. For those puts, I received a premium of $1.43. Therefore, to calculate my cost basis, we once again subtract the $1.43 from the 48 strike price, which leaves us with a cost basis of $46.57. To calculate the cash on cash return, for the case that we are not assigned the stock, we once again divide the premium we received, so basically the $1.43, by our strike price minus the $1.43 in premium we received. So our cash on cash return for this holding period of again 45 days is around 3%. So that's it for today's topic, Intel. Please always keep in mind to do your own research, your own due diligence, and never just trust a guy on the internet telling you that there may be a potential investment chance. If you have any questions, just leave a comment, and if you liked today's video, don't mind leaving a like. See you next time.